Hold on to your wallets, Australians. The RBA is playing a long game with interest rates, and it's not looking easy for households. With inflation expected to stay stubbornly high, the Reserve Bank's latest economic forecast suggests the next 18 months could be financially challenging for many. On Melbourne Cup Day, the RBA Monetary Policy Board made a move that surprised no one. It kept the cash rate steady at 3.6%. This decision was widely anticipated, especially after inflation in the September quarter came in far hotter than expected, reshaping expectations for 2026. During the post-meeting press conference, the focus quickly shifted to a question on everyone's mind: what's next for homeowners already stretched by mortgages? RBA Governor Michele Bullock offered little in terms of concrete solutions, opting instead for a familiar sports metaphor, saying the board is taking it meeting by meeting. But here's where it gets controversial. For those hoping for rate cuts, it's probably time to adjust expectations. A rate hike is still on the table, however small the possibility might be. One clear takeaway: the RBA does not expect inflation to return to its target range of 2 to 3% until 2027. This means that consumer prices will have remained above 3% for nearly 5 consecutive years, hardly a comforting scenario. Inflation is projected to rise to 3.7% by mid-next year, gradually easing back under the upper limit of the target band only by early 2027. For ordinary Australians, this will translate into another year where wages struggle to keep pace with rising costs, making day-to-day living even tougher. On the political side, households may see some relief. The Albanese government could extend power price support beyond this year to help families cope, but this could further complicate the inflation picture. Even modest economic growth might feel too hot in an economy where productivity gains are stagnant. On a slightly brighter note, the RBA predicts that unemployment will remain stable at around 4.4%, suggesting the labour market is holding steady despite these pressures. Bullock emphasized that the board is targeting a 2.5% inflation rate, and anything just below 3% is considered insufficient progress. Looking ahead, the RBA's forecasts assume the market expects one more rate cut in 2026, but Bullock warned not to put too much weight on that. Her comments: "It's really an interesting question about whether there's many more rate cuts left to come," signal a significant shift from earlier in the year, when multiple rate cuts were anticipated. And the big question everyone is asking: could rates actually go up next? Bullock's answer was as open-ended as it gets: anything's possible. So, what do you think? Should Australians brace for higher rates, or is there a chance the RBA might surprise us yet? Sound off in the comments below and share your thoughts on this economic balancing act.